Right, good evening. It is Wednesday, the 20th of April, and just pushing into Thursday here in the UK. And this is Stage Analysis Members Midweek video. So I'm gonna go through a few bits tonight. Usual stuff, short-term breadth, some of the watchlist stocks that have come up in the last few days of interest, and the group themes. Have a look at what's going on in the major indexes. But I wanted to start tonight with a quick chat about what's been going on in Netflix since its earnings yesterday. So I highlighted this chart I posted it on the Twitter feed, and I think I did it in the main watchlist post as well. But in last night's post, it had dropped down to, in the after hours trade, to about the 260, 270 kind of area following its earnings. So it gapped down around, not gapped down, but it moved down around 25% in the overnight trade, and then it followed through today convincingly to the downside and is off over 30% now on the week, and in a deep stage 4 basically stage 4 continuation breakdown from here. However, if we look at it from on a longer term perspective, I think it's quite interesting looking at it on the monthly chart of where it's at now. So we're actually now with this is our first change of behavior that it's had for a long time. It's been in a monthly stage 2 uptrend for basically 10 years. So this is our first change of behavior that it's had compared to these other swings. These are all similar sort of length. So until this is by far the biggest and the sharpest of the pullbacks within that monthly stage 2 uptrend there. So we've now put this into what we call a monthly stage 3. And as we know, obviously, monthly stage 3 means you're in a horrible stage 4 decline on the weekly chart, which has now come off. Way off now. It's off 70%. So it's going to take a long time for that to recover now. That can take some, when you have anything above a 50% decline, it can often take a year or more to recover and move back into a potential stage 2 again. Again, if we look at this longer term chart, it's only happened 2 times before where it's got this far extended. So I've highlighted the relative to the 10-week. We can only use the exponential moving averages with the PPO indicator here. So using the exponential moving averages, but basically back in late 2011 it got this extended, and back in 2004, so it's now 50% below its 10-week moving average and 50% below its 30-week moving averages. So it's the deepest that it's been since these periods. But as you can see, although these were basically the most extreme it got to, it did take a good 6 to 9 months back in 2004, and it took well over a year back in 2011 to almost 2013 before it started to move back towards stage 2 type territory again on the longer term on this monthly chart. So if you zoom in on go back to our weekly chart here. If we look at this on a longer term, where's my select start date? So we go back to that period. And where are you? What did I say? 2011. There we go. So this is the 2011 decline, which then it had a bounce back up to the 30-week moving average, but then spent a good part of the rest of the year pulling back in again and starting to form a huge stage 1 base. It was very weak for the most part of the year before it finally managed to move back out into stage 2 again at this point. So it took over a year for it to move back through. So at the moment, we're in a very similar sort of situation to this, in that it's come off. Where we got this off the high here? This one collapsed. That one collapsed 80% during 2011. So it's come off about 70% in the current current chart here. So as you can see, when you get a huge stage 4 decline like that, it's basically a good idea to get out of the way. Like one of the main things of the stage analysis method is that basically once a stock is in stage 4, that you should avoid it. So we had highlighted it back here back in January when it started to come off it was the after hours earnings in January, basically when it first dumped down into stage 4. But previous to that, how could you have seen it before that? There was actually this change of behavior back in what was that, in November, early December time. I think it was late November. Again, potentially the earnings move back then. It came off. We had this change of behavior following a stage 2 continuation breakout from this massive stage 3 range that it had been in. So we got this change of behavior, significant weekly bar here, which then turned it back down again. And then it couldn't, you can see it couldn't manage to break back above half of that at least in the following month or so, and then started to break down further back below its 30-week moving average. So at this point here, the stage 2 breakout completely failed. We've got a little head and shoulders type pattern on this and a secondary breakdown in here. So there was multiple Wyckoff entry points to the downside on this one, but as you can see, there's been plenty of hints on the way down, as it hasn't managed to make a higher high at any point on the way down. All of these lower highs. And again, on this gap down here, the rally attempt back up only made it back up to around halfway into there, and obviously the bottom of the prior stage 3 base here, so it couldn't even get back up into the base before squatting back down again. And then this recent weekly bars, again, little supply tails on these as it rolled over again into earnings. So someone tweeted at me yesterday about the fact that we were in phase C at this point here on the daily chart, which it was potentially, but obviously until the earnings come out, you don't know whether it's phase C or not, and basically it's not a confirmed phase C until you actually start to get that rally back up and it starts to move back out again. So it actually was just a weak move within this continuation base structure, so redistribution base, and now has just dropped off the edge of a cliff again. So it could well make a near-term bottom now, as we can see from this longer-term chart. We could quite easily start to forge a low. However, any kind of rebound that comes would potentially be shortable again, as there's so much overhead supply in this now. So Netflix is going to be one to avoid for a while, and could be out of action permanently, or it could just be out of action for a long time. But I'm sure if it does come back into the frame again, it will start appearing in the watch list again. But for now, it's obviously a long way away. Okay, moving on.